Hello, you're watching HW News. The Reserve Bank of India Monetary Policy Committee today announced the unanimously agreed repo rate cut, the rate at which it lends to bank by 25 basis points from 6% to 5.75%. The bank also changed the monetary policy stance from neutral to accommodative. The reserve repo rate and bank rate have been adjusted from 5.50 and 6.0% respectively. The bank also lowered the GDP growth forecast from 2019 and 20 to 7% from 7.2% in earlier projection. Now, on the other hand, inflation projection has been raised to 3.1% from April-September and 3.4 to 3.7% or the second half of the year. Now, this is the third straight interest rate cut under RBI Governor Shaktikanta, who also heads the Monetary Policy Committee. Now, let us hear what our business and finance editor Akhilesh Bhargav has to say.
The Reserve Bank of India Monetary Policy Committee has come up with the third consecutive interest rate cut. It was expected. It has cut interest rates by 25 basis points, which is 0.25%. So the repo rate, which is the rate at which Reserve Bank lends money to banks, has come down to 5.75%. As we said, third consecutive interest rate cut. The Monetary Policy Committee has been also very clear why this was needed, even though all of us in the market also expected it. The committee agrees that, as the committee says, growth impulses have weakened significantly. In other words, the GDP growth has come down significantly. It was the fourth consecutive quarter of GDP growth coming down. Matter of huge concern. So it notes that, and it believes that with interest rates coming down, entrepreneurs will be encouraged to borrow and invest in new projects. The other reason why the MPC justifies the interest rate cut is a sharp slowdown in investment activity and a reduction in consumption, both of which it now agrees are a matter of concern. It is again believed that if the interest rates go down, the consumers will be willing to contract more and more consumer loans, which could be for vehicles, house loans related to the white goods, etc., and the growth in the economy would go up. Our belief is that while interest rates needed to be pruned, the question is just pruning of interest rates enough for the investors and entrepreneurs to now start investing in new projects? I think something more is needed, because apart from interest rates being high, what has been missing has been confidence of entrepreneurs in the Indian economy, and because of that, they have been unwilling to invest in new projects. As far as the household consumers are concerned, interest rates going down may not impact them that much, because more than the interest rates going down, what they need is an increase in household incomes, which has actually depleted in the last couple of years.
Now, in February, the committee had cut repo rate by 25 basis points from 6.50% to 6.25%. The Monetary Policy Committee had then shifted its stance from neutral to calibrated tightening. When the Reserve Bank of India cuts its benchmark lending rate, banks typically pass on to the benefit to the customers, as when the bank decides to pass on the cut rate, consumer could see home, auto or other loans getting cheaper. For retail consumer, a cut in rates could have a too prolonged impact. For depositors, new deposit will earn a lower rate and thereby lower returns. And for borrowers, though a downward movement of interest rate would bring down the interest outgo in the near future. Now, for floating rate home loans, however, a new rate becomes effective on the reset date of the loan. India is among the central banks across Asia shifting to looser monetary policy to boost their economic amid risk for the US-China trade war. But the repo rate cut is a good news for borrowers, as EMIs are likely to go down, assuming that banks will pass on the benefit of the cut rate. Now, so amid this high expectation that the RBI to ease that cost of funds in its policy, seems like the Shaktikanta led Monetary Policy Committee has a tough task ahead of them as the country's economic heads into a serious economic downfall. But first, let us hear the monetary policy decision in details from the RBI Governor Shaktikanta himself.
During June 3rd and 4th, 2019, the Monetary Policy Committee assessed the recent macroeconomic developments and the outlook in its meeting today. It voted unanimously to reduce the policy repo rate by 25 basis points. So we had discussions on June 3rd and 4th, and then again we sort of took the decision today, and the decision this time has been unanimous. And the decision has been to reduce the repo rate by 25 basis points and also to change the stance of monetary policy from neutral to accommodative. The unanimous vote reflects the resolve of the MPC to act decisively and act in time. I thank the MPC members for the rich and fruitful discussions which are reflected in the resolution and in the policy decision. I also wish to express my gratitude to our teams in the Reserve Bank of India for their hard work and diligence in providing valuable support and inputs to the MPC for its work. Let me now turn to the key global and domestic developments that the MPC has reviewed. At the outset, the MPC noted that global economic activity has not been able to sustain the improved performance seen in the first quarter of the calendar 2019 in the face of deepening slowdown in trade and manufacturing, which has impacted advanced and emerging market economies alike. Inflation remains below the target in several economies. In advanced economies, incoming data for second quarter of 2019 point to loss of momentum relative to the first quarter. In the major emerging market economies, economic activity has either slowed or has contracted. It is in this context that the central banks across the world have moved to an accommodative stance in setting monetary policy. Financial markets have been unsettled by the acrimonious US-China trade tensions. Crude oil prices remain volatile, reflecting evolving demand-supply conditions and geopolitical concerns. Most emerging market economy currencies have depreciated against the US dollar. On the domestic front, the MPC noted that the May 31st, 2019 data release of the National Statistical Office showed that the GDP growth for 2018-19 has been placed lower by 20 basis points at 6.8% relative to its February 28th estimate. In Q4 18-19, GDP growth decelerated sharply to 5.8%, down from 6.6% in Q3 and 8.1% a year ago. On the supply side, agriculture and allied activities contracted while manufacturing activity weakened sharply. Service sector growth accelerated, although construction activity slowed down markedly. Looking ahead, the Indian Meteorological Department has predicted that the southwest monsoon rainfall, that is June to September 2019, is likely to be normal at 96% of the long period average. The third advance estimates of food grain production at 283.4 million tons for 2018-19 were lower by only 0.6% as compared with the final estimates for the previous year. Further, the stock of food grains at 72.6 million tons as on May 16, 2019 were 3.4 times the prescribed buffer norms and provide a backstop against any supply disruptions due to weather adversities. In the industrial sector, growth in 8 core industries decelerated sharply in April. Credit flows from banks to large industries, however, strengthened, though they remained somewhat muted for micro, small and medium industries. Seasonally adjusted capacity utilization in the manufacturing sector slipped to 75.2% in Q4 from 75.8% in Q3. Import of capital goods, a key indicator of investment activity, remained anemic in April. High frequency indicators suggest moderation in activity in the service sector. Turning to inflation, the MPC took note of the fact that retail CPI inflation remained unchanged in April from its March level of 2.9%. Higher inflation in food and fuel groups was offset by lower inflation in items excluding food and fuel. Inflation expectations of households in May 2019 round of RBI survey declined by 20 basis points for the 3-month ahead horizon compared with the previous round, but remained unchanged for the 1-year ahead horizon. Normal growth in rural wages and in the organized sector staff costs remain muted. Liquidity in the system turned to an average daily surplus in early June after remaining in deficit during April and most of May due to restrained government spending. Apart from liquidity injections through LAF operations, the RBI conducted two OMO purchase auctions in the month of May amounting to 25,000 crore and a US dollar buy-sell swap auction of $5 billion equivalent to 34,874 crore.
And for more news updates, log on to www.hwnews.in. Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.